Ladies and gentlemen, welcome to the Big Tech Frenzy, but a special episode of the Big Tech Frenzy, as this is one that we are using fiscal AI. Okay. So every week, usually on Fridays, maybe we call them fiscal Fridays or something along these lines, we are going to be deep diving or looking into a business that we are highly anticipating purchasing. And now I'll be very honest with you guys. After this episode, I will be buying this company. I'm going to be taking a stake. You're hearing it before I've actually taken a stake, but that will happen tomorrow. That being said, I'm curious to see if people have an assumption of what company I will be taking stake in. I see some comments in chat about what it might be. I see Broadcom. I'm seeing Duolingo. I'm seeing potentially TerraWolf. I mean, there's a bunch, but already have Salesforce. BM&R already have. Nubank I already have. But let me say, the reason why I also included Nubank in the thumbnail was a little hint as to what it might be. Now, I see Grab, lots of Grab, holy, tons of Grab. Reddit, Shopify, I mean, that's my second largest holding, Diana. So I don't need any more Shopify. I've got more Shopify than I do SoFi. Inter & Co. I mean, Necro keeps repeating DLO. Not even quite sure what that one is. Hexagon, Mercado Libre own that one already. UNH, seeing more DLO, Figma. Okay, let's get into it. I mean, I've teased it enough. I can now begin to talk about it. So, the company that we will be talking about is DLO. Duolingo. Very much aware about what this company is. And after a stunning last quarter results, I thought, oh, you know what? I'm not going to be able to take stake in this business at all. In fact, it popped from 10 to 15 on their last earnings. It was just such an incredible result. But then the market does what the market does to emerging market businesses and continues to feel like there's fear in this company and selling it off. So maybe this is an opportunity to buy into a business that has incredible management, has quite an unbelievable style of business with a ton of fear because it's in payments and they're worried about things like stablecoins. But obviously, DLocal, we're going to talk about this business. If I'm taking stake, I don't want there to be risks there. I need them to know that stablecoins is potentially a risk and that they are trying to do something about it. And they very much are trying to do a lot about it. So not only that, but I've been following From Growth to Value. You guys probably know I've had him on the channel a few times, Chris. And he continues to highlight this idea that, you know, capital light businesses do much better than capital intensive businesses, right? Now, this is the trend, not the rule, right? So there's exceptions, of course. Tesla's a very capital intensive business. Amazon's a very capital intensive business. Nvidia to some degree, but honestly, they've been more capital light than capital intensive. But there are a ton of companies, SoFi for one, capital intensive, more than capital light, but that is starting to go in the way of capital light. So with this, I want to talk about a capital light business that is very much in my realm of understanding. A mix of both a company that benefits from blockchain, artificial intelligence, payments, asset light, good management, emerging markets, cheap. Okay. So we can go through that while also being very much a growth story. Okay. So this is what I wanted to highlight is what's happened recently. And that's been a breakout of some of their clients. They have a very large mix of large merchants, most famously probably Meta, which Duolingo was used to help get Meta into a lot of LATAM, take payments, distribute payments. So that's been a very big part of their success over the long term. But just very recently, they've started to show that the expectation for growth can very much come into play. So just on a year-over-year basis, but looking quarter over quarter here, we saw growth go from 8.7% year over year to 17% to now 49.7%. An outlier quarter? Not really. We can see that in guidance. They want to hold up, roughly about a 35% growth rate going forward. And Wall Street also sees that as well. I mean, the expectations for growth are staying around the 30% marks. But once again, they believe that that's going to be selling off. So, am I saying Duolingo? DLocal. Sorry. They're so similar. I don't mean to say Duolingo. My bad. It's just the last episode that we did was on Duolingo. So yeah, my bad. DLocal. Not only do they have similar tickers, they have similar names, similar everything. So let's get into some of the mix of what's actually happening here at DLocal. First up, like I said, if we can go to, where am I looking for? Let's bring up market cap and let's bring up total enterprise value really quickly. So this company is extremely small. It's still a $4 billion company whenever it comes to US dollars. And then on an enterprise value, because I said it's so capital light, that they actually have much more cash than they do debt, bringing down the actual cost. If you're looking at it of, okay, what am I actually purchasing? A company that has an enterprise value more than the market cap means that they're heavily in debt. And then if they are lower than their market cap, then that means that they are, more cash based, because why would you be paying for cash? You're not. That's an incentive if the company is actually lower. So like I said, there was a recent sell-off as well. And then we need to look at just quickly the ratio. So this is an emerging market business. Most of their business actually comes from Brazil and Mexico, but they are wanting to expand. Not only do they want to expand, but they have payment processing in Africa, in Asia, and it feels very much like a play similar to Shift4, where I'm buying it at the point of which they are starting to break out globally. Okay. And the concerns that people have, which we'll talk about, which is that the majority of their payment volume comes from large merchants. I think top 20 merchants make up for 60% of total payment volume, which does concern people. The actual percentage of those large merchants' payment volume is very small of what's actually flowing through DLocal. Okay. So, for example, in the Brazilian area, their top merchants, I think top 10 merchants make up for about 20% of the amount of payments that are going through those LATAM pieces of Meta and many of their other large merchants. Is only about 20% they're starting to deal with DLocal. Whenever you're looking at like Africa, it's like, around roughly 10%. Then Asia, it's even like low single digits. So they have so much more room to grow in their total payment volume versus how much is actually, flowing through their large merchants, let alone the amount of new merchants that they're actually acquiring. We're going to talk about all that. But I had no structure in the way that I wanted to, communicate this play for you. So I'm going to be all over the map here. Whenever we look at the price to earnings on this business, we essentially see it at a 28 times and then a forward basis of 14 times. Or sorry, 19 times. Did I mess that up? Sorry, it might have been I'm looking forward. Sorry, 19 times. For 2026 it's 17, and then for 27 it's 14. Yeah, 19. So meaning that the growth expected between this year and the year going forward is quite drastic. And that's being furthered even more as Wall Street continues to up their pricing and the stock is getting sold off, which is, hilarious. So a decent time to potentially look at a company like this. Now, there were a bunch of businesses that I was looking at to potentially make a stake in and want to bet, a large chunk of capital on. And the same thing that I continued to run in on. Extremely fast growth, high margin businesses in a business that I understand, which is either in tech, artificial intelligence, or payments or banking, these sort of things. And I kept running into the same issue. I was finding a business that was unbelievable and that in an extremely high premium. This is an area that I know very well, LATAM. Feel comfortable with the percentage of my market share in LATAM, because whenever you're in emerging markets, the GDP of those areas that DLocal is focusing in on is growing much faster than what you would find in more larger payment industries. So if you're looking at the G7, you're essentially seeing GDP growth of around 1.5%. If you're looking at the areas that DLocal operates in, you're seeing closer to more like 4%. So not only is the level of payment volume actually growing, but DLocal is growing much faster within them. So the same framework that I find any business is what we're attributing to DLocal, or if there is things that would not fall under that, then I'm going to try to point those out. But what I'm seeing is a company that's growing as a percentage of market share extremely fast. I'll show you that here in a second. And then on top of that, the amount that the market is actually growing is growing also very fast as well. Let's go ahead and take a look, because I can show you some slides for the people that actually want to see the business. And we are going to do that right in Fiscal AI as well. I'm telling you guys, I'm not partnering with just any business. The reason why I partner with Fiscal AI is because I use them for everything. Okay. So, and also, if you guys ever have any concerns or whatever with this product, I'm really close to management. So the products that they're working on are products that I want, okay? Which also means, products that you guys want. If there's something that you see like, hey, it would be great if they had these things, like, we can figure that out. So I'll talk about TPV, which is total payment volume, here in a second, and the revenue growth rates and everything, which is just, super, super fast, along with the improving rates that they're seeing for, adjusted EBITDA, and then flowing down into free cash flow, which is up 156% year over year. This is a very fast growing business. Okay. Remember, the multiple that we were looking for on this business is, and that's on net income alone, was 20, and then on a forward basis, like 19 times. So the first place where I wanted to stop, like you see here, internet penetration, GDP growth, credit card penetration in the areas that they're dealing with, which, by the way, is expanding very quickly. We'll talk about their licenses and the licenses that they want to get into next. But they're they're extremely small and growing very fast. Okay, that's not normal. That's a winner. That's a growth company. Okay. Same thing whenever we're talking about the deepening of relationships. We continue to see that across many of their merchants. Faster growth, deeper wallet share. It's happening across many different industries. DLocal's not without its problems, but you're also paying for that as well. And then whenever you're talking about innovation, it's constantly happening as well. So Pix in Brazil, by far their biggest industry. Now they're starting to create products for Pix. So not shying away from the other payment, like the other payment innovations that's happening. The most, or the largest way that people make online payments and send money locally in Brazil is through Pix. Nubank, the reason why I felt very comfortable with them, they've got an extremely close tie with Pix, and DLocal also wants to do the same. Buy now, pay later. It's coming here whether you guys like it or not. DLocal understands that. Let's continue to improve products for buy now, pay later. And then stablecoin remittances. This is actually funny. I thought that this was interesting. If someone's trying to send money between like cross-border from Mexico to Vietnam, so you have to go from Mexican pesos to Vietnamese dong, they actually send it via stablecoin, but transact it through US dollars. USDC is an Ethereum-based coin, and then it goes back into the next currency. So I thought that was quite interesting. But yeah, they're not trying to shy away from stablecoin remittances, and you'll actually see the rate in which they're growing in remittances because of these types of innovations is faster than any other industry that they are a part of. Okay, remittances although being small percentage of their overall total payment volume. I'll highlight that in a second. But yeah, just unbelievably fast. Actually, you can see that here. So whenever we look at their strengths here, remittances is essentially growing at 186% year over year. Okay. Advertising down 32%. That could be a relationship with Meta. Like, who knows what is causing that? Like I said, this is a newer company that I'm looking into and have not done, my regular DD. These are like quick looks into the businesses. Okay. So this is more of an invest than investigate type thing. This is just, first week. I'm going to do a lot more DD on the companies, obviously, once I own a decent share of those businesses. But commerce, which makes up for the biggest share of their overall volume, growing 85%. Okay, financial services, ride hailing, SaaS, streaming, they don't care. They just want to deal in payments. And yeah, of course. So this is another thing too. Their total payment volume, which I will show, is like anything in payments, you have to really look at the take rate of what you're actually charging for those payments. That's the thing that's going to change the most. DLocal has come out and said the payment industry is going one way. The take rate is going to continue to decline. Okay. But if they can take, plus 53% plus, plus 53% or 60% on a constant currency basis, then they're going to way outgrow the compression in take rate. And actually, DLocal thinks that it's going to be to their benefit because many businesses that have, not as good of a technology structure or cost structure as them will not be able to play on pricing as well as they can. And the way that I'm seeing DLocal is a technology first business through and through. Okay, this is more closely related to the types of businesses like Adyen, but playing in different markets. Less in Europe, more in the emerging markets, and dealing with very large merchants and working their way down. But large merchants plays a big part in it. Okay, but depending on the percentage of the take rate that is local to local versus cross-border affects their take rate. The amount that actually is pay in versus pay out also greatly affects their take rate. Okay, so we need to follow this, and this is going to be a very big part going forward, but they are showing off and communicating their data better than many, many companies. Okay, that's another thing that look for whenever you're like DDing through a business. How transparent are they? And what I find with the companies that are in Latin America, why I love them so much, is they know that there is this inherent scare that these are not U.S. regulated businesses. Now, they do end up doing all their numbers in a GAAP basis, generally accepted accounting principles in U.S. dollars. So they follow all the U.S. rules, but they don't have to. Okay. They also show off so many slides. You see this across Mercado Libre, Nubank, and DLocal, that they show you too much information because they know that that's what's going to win over U.S. investors, that you need that level of transparency. Okay. And that's what you're going to see across the board here. So, you can see in the different markets that they operate that there is struggles depending on where they are or strengths in different areas. But what they're doing very, very greatly is that they continue to expand in more markets. For example, I want to get to one thing while we're on this slide because we might not go back to their slides really quick. But, not only do they continue to get operational leverage, which means they're making more money for every dollar because they have parts of their business that are not perfected, so they can squeeze more efficiency out of them. And you're really, really going to see that across their comments about artificial intelligence and blockchain. We'll talk about that. But let's quickly go to their guidance. So this is what you're also seeing now, is that TPV at the start of the year was at 35 to 45%. Then they actually upped that to 40 to 50%. Revenue was 25 to 35. That's now 30 to 40. Gross profit 20 to 25. That's now 27 to 37%. And adjusted EBITDA of 20 to 30% growth, now 40 to 50% growth. I mean, they have really pushed their guidance up, and we still have more quarters. So this is very similar to the sort of SoFi effect, where I'm not even sure I believe these numbers yet until the next quarters where they continue to see outperformance and then push it even further. Okay. So the Wall Street expectations are once again very conservative on this business, yet they still are ramping it up higher and higher. Okay. But let's go ahead and go back into this part. And then we'll go to segments and KPIs. One of the great things about Fiscal AI is that they'll also show off data, whatever they can show off that the company has given us. So they stopped reporting Chilean revenue because it was just such a small percentage of their overall business. But that's not Fiscal AI showing that. They even say, you know, this metric is discontinued. They're not showing that data. But whatever data they do show is, you know, from the company, and they're pulling that off through artificial intelligence. I think they use like Gemini or something like this to scan the actual reports rather than just doing, you know, getting all your information from either S&P Global or, you know, some sort of SEC reporting. That they actually get the data that other companies don't have to report because they're not GAAP-based businesses. So that allows us to see total payment volume. If you're judging a payments company, you judge it via total payment volume and take rate. That's bar one, okay? This is where DLocal shines. It's a very, very similar picture to what I saw from Shift4, where they were growing much faster than their competitors, and the sentiment level on the company was much different than the actual picture of the internal performance. So doing extremely well. Expected an increased guidance going forward. Okay, so they expect this to continue to go forward. They're landing new customers, deepening their relationship with existing customers, and like I said, expanding into new markets. So during this latest quarter, they secured regulatory approval in United Arab Emirates, Turkey, and the Philippines, while also expanding market reach through their existing businesses. Then, in their most recent fireside chat that they just did a few days ago, I think it was on the 9th or the 10th, they said, we're now licensed in the UK, we're licensed in the EU, we have a license in Singapore on the way, and we have 37 other licenses and registrations, and we're actually starting to pursue US licenses for payments. So if people are worried about, you know, the regulation of this business, or people are worried that, you know, the bulk of payments actually happens in the US, that is what we are going to highlight here. Deepening relationships with existing players and also helping, you know, LATAM companies go north as well. So that's super exciting. Now, the payments industry for DLocal in the United States is actually not what they're super excited about. I mean, the take rate is much lower. The competition is super high. The reason why DLocal is gaining such traction right now is that they're in an area similar to Nubank where there's just such little competition. Okay. So very, very similar to the Nubank play, to the Mercado Libre play, that you're in an industry that is just not being optimized nearly as much as the United States. And that comes with its problems as well. But that's the thing with DLocal. This is not an asset heavy business. Both Nubank and Mercado Libre are very asset heavy. So you depend on the credit strength of Latin American users. You depend on, essentially that you depend on how they are doing economically. You depend on whether they are going to pay back their credit cards. DLocal doesn't care, right? They're the payments company. So I think I've struck a balance between looking for amazing payments companies while also being able to get one that's extremely cheap, growing fast, and has market sentiment turn sour even after an unbelievable, quarter recently that they expect will actually is showing signs of a turnaround business. So there's two ways that I sort of look at this. One is you go ahead and you buy PayPal or something like this because you think that that's a turnaround play, and you suspect that the market is going to see that in a few quarters. Maybe that doesn't come to fruition. DLocal, I had waited for that quarter, which was the breakout quarter, but yet the stock didn't turn around. Like this is SoFi Q3 2024. I mean, this is a breakout, but yet the market is not understanding, so it hasn't gone from 7 to 25 yet in the SoFi case, right? DLocal, I think, does have that ability to break out and not go a little bit higher. I'm not hoping for $15 or $18. I mean, like double from here, right? And then we can assess if they continue to grow and do well in those other industries like Africa, Asia, Middle East, stuff like this that, can prove that the market that they have in Brazil is, something that they can replicate in many different areas. So, let's see. We can take questions and stuff like this. There's so much that I want to talk about, but I'm also all over the road. I'm everywhere right now. Oh, I didn't talk about artificial intelligence. Artificial intelligence. So they have about 1,300 people that work for DLocal, and the CEO, who is I think he was the CFO or the COO of Mercado Libre for the whole time. And so now he's transitioned from, Mercado Libre, which was an extreme success, over to DLocal, and is hopefully trying to replicate some of that success in a company that has been underloved. Hong says drink water. Lena says drink water. I'll have to drink water. Why not buy Grab at 6? Well, one, the stock price of saying 6 versus 13 doesn't mean the multiple of the business is any different. Okay. Or like I don't know what I'm buying Grab at. And also, I like Latin America. I understand that industry, and there's such a percentage of the overall company that is, or sorry, my portfolio that is in LatAm. So the cross sell there is very easy for me to say, okay, you know what? I could really pick up on another business. DLocal's volume is crap. Don't care about that at all. Do not care. If it's underloved right now, that's perfectly fine for me. There was a huge time where Nubank was extremely underloved. So, yeah. Okay, sorry. I was reading, haven't followed DLocal in a while. There was fraud accusation. Was that cleared? I didn't go back too far into their, their old problems, but I would assume they were. I mean, they completely changed around their C-suite. I'm sure that had something to do with it, but I did not look at older cases. This is only a first look into this business. How long are you planning to buy DLocal to get your position? Well, I think it really depends on pricing. But yeah, probably over 2 quarters, something like this. I'm going to buy in tomorrow as a sort of starting position, and then continue to listen to many of their presentations. And, I only know some of their extremely large merchants that they're dealing with. I'm aware of the case of Meta being brought to LatAm through DLocal. I want to know what their other major players are and go through all the reports. But yeah. Tanner, please get on the Grab train. I just don't like. Here's another thing. Why would I buy Grab if I could buy like C Limited? I still get access to the Singapore market, East Asia, like all those, many of those industries growing way faster, better margins. I'm just not on the Grab train, and I don't know it very well. Okay, I understand that, but and I think that's what everyone's answer is is that someone else likes it, and that's perfectly fine. And like, that does not mean that because I don't like it that doesn't work. I mean, Grab could do amazingly, but if I was to look, yeah, a lot of people here own C over Grab. I think that's sort of the audience that I cultivate. I think is that they're less story stocks and they're more fundamental to some degree. But C Limited's been working. I mean, I was really worried. That's for another episode. We'll do that like another week. But C Limited's definitely an interesting name. How are the options premiums on this name? I assume that, and I didn't look, but I assume with the extremely low amount of volume that some people were highlighting, that you're probably not going to get too heavily into the options market for DLocal. But I also think that that's a terribly bad way to look at businesses. Obviously, for some people, those are the types of companies that you want to own. Is if you are, potentially wheeling, that you need a company that is extremely liquid. But for me, if I see a company that does have an extremely, liquid options market and there's a ton of volume, that doesn't mean that it's a good business. So I'm looking business first and trying to figure that out and then going from there. But I'm a total addressable market investor. Payments are unbelievably huge. Okay. Bringing companies to growing to growing emerging markets is a massive industry. There's so many businesses that will want to come down to LATAM or to Africa or Southeast Asia or the Middle East or some other areas like this to expand from US companies over. And I saw a very similar case for Shift4, buying that in the 50s. And then, I don't know, those types of businesses I can just really see. And I feel very concrete with the cross sell there. But why buy DLocal compared to PayPal? Well, I'm mainly because I think that one is a growth company and one wants to be a growth company. Total payment volume on PayPal is still like just growing in single digits. And it's, it is exciting knowing that they're not a dying company and they are growing, but 60% on a constant currency neutral basis. That was a little bit redundant, but on a currency neutral basis, that they're growing at like 60%. That's incredible year over year. So today, maybe they're doing 9.6 billion in payments, but if it's anything like Shift4 and they can get their grips in certain industries and expand internationally and take those companies that they had grown strong relationships in Brazil to Africa or other industries as well, or other geographies as well, that 9 billion quickly turns into 50 billion. Okay. If they have improving take rates, which, by the way, I was talking about the artificial intelligence, they have about 1,300 employees. And the CEO said about 400 to 500 of those are simply doing data or manual data entry, because refunds is not a figured out business. And there's a lot of clunkiness still in payments. So there's certain areas where they just need a lot of people right now that could just be solved industries. Solved with artificial intelligence. Someone said, what stock? DLocal. So I'm not going to DCA the way that people would, I guess, normally consider. It's not a name that I know that well. So I'm going to do a lump sum purchase on Monday and then obviously judge it depending on the price and the more due diligence that I do. So as I continue to learn about this business, I'm going to, like, if everything that I bring up continues to look positive, the ratios on this business continue to look positive, then I'm going to be happy. But this is a payments company, right? So you see, wait, do I have anything pulled up? let's quickly throw up like, because of their asset light nature, they are making tons of money. They have incredible margins. They want to improve those through cross-border, better efficiencies through stable coins, new products that expand relationships with Brazil through smart picks, and AI potentially lowering their total amount of headcount, or at least useful headcount that they want to improve. But yeah, I'm going to continue to judge it based on total payment volume. And then look at this. Net revenue retention rate, 145%. Talk about that, eh? So this is where the company had ended up getting sold off like crazy, was because there was a period where things were getting a little bit dicey. And if there were, old management concerns, which I'm pretty sure Melly's leader came in this range, the CFO, he ended up coming over to DLocal like whenever things were getting real bad. Okay. So I think that's where they started to lose some larger merchants and actually end up having to repair the business. But their net dollar retention has not fallen below 100%, which is insane. And then now it's at 145%, meaning the relationships with existing users is already expanding quite quickly. And you can actually see this in one of their slides, I think, in the last quarter. Let's take a look here. I'm pretty sure they showed off a net dollar retention chart. Proving net income. Did I miss it? Net dollar retention. So not only are they continuing to do the level of growth that they've seen, but existing merchants are furthering their relationships with Duolingo or DLocal, and then new merchants are adding on, and then they will start to multiply from there. But like, look at this, top 10 merchant revenue and concentration percentage. The jump up here was just so unbelievable. But yet the percentage of share is still in line with what they've seen for a long period. This is what people worry about, is that they're overly concentrated with their top merchants. But the top 10 and top 20% merchants, like, still, those are, it's not top 3. Like, people still buy Marqeta, which is another payments company, and 75% of their revenue comes from one merchant. Okay. They're essentially a block or Cash App proxy. This business is like, okay, this is 62% for top 10 merchants. And even then, they said that they're not handling all their payments. They're doing like 20% of their payments in Brazil and like 5% of their payments in Asia. So if those can even expand, they can further those relationships. That could be a massive amount of increased revenue just based on their existing relationships that they already have. Remember, the multiple that we're paying is not, nearly what you would pay for many other businesses. $4 billion company, very similar to like an Adyen, I would say, but in emerging markets. So, huge cost advantages, great technology, and dealing with larger merchants and working their way down rather than like Stripe working with small merchants working their way up. Tanner buying for the dividend? No. No worry, Mercado Libre will take market share? No. No. This is for like, that's like saying, am I worried that like, I can't even think of an example, but a company that barely deals in any form of payment. They're not even really related at all. That almost DLocal would help them. Would you buy Stripe when they IPO? I mean, potentially it would depend on their financials. But yeah, how big of a competitor is Mercado Pago to DLocal? Not at all, or at least very, 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 very little. Okay. Let's see. Yeah, Graham is sort of explaining it here, that a single technical integration that gives merchants access to 900 plus local payment methods in over 40 emerging markets. Behind that API sits a cloud platform that handles authorization, foreign exchange, fraud tools, reporting, pay-in, and payouts from end to end. So this is why I say it's very much like Adyen, is because it's not just that, how do we handle credit card payments or something like this? No, it's because they're in areas similar to how Adyen was in Europe. Like you're tackling such a different beast than what US payments would be, or something like this, where there's only like so many different payment options. In emerging markets, there's hundreds and hundreds, similar to Europe, where there's like, France would have so many different payment methods, and then Germany would have so many different payment methods, and all these things. It's actually extremely confusing from a technical side. But on emerging markets, right? So faster growing market, they're growing in market share. They're growing in market share faster than Adyen is. And you look at the multiple. So if we go to, let's go to charting really quick. And here, wait, I'll just share this with you so you guys can just see me build this. But I'll just go to a new thing, and we'll bring up like Adyen, for example, and then bring up Duolingo. And then we can also bring up like PayPal, just because that kept being brought up. And they do handle payments, but they're sort of a mixed bag, right? They have a wallet. DLocal does not. They're just handing merchant payments. Okay. But let's go ahead and then look at PE. And I want price to sales as well, because not all these companies have the same level of maturity here, but they do play in the same space. And then forward PE as well. Okay, so really quick, just looking at price to sales. Sorry, my camera's in the way. And then we can look at this annually, but I just prefer quarterly. Slide this across. It's so easy to build charts on fiscal AI. And we'll just look at the last year. Okay, so we could just download this, and then you can get like an easy to share thing here. But if we look at it from this perspective, and I can zoom in or whatever to make the text a little bit bigger, but from a price to sales perspective, you have Adyen trading at 19 times. Remember, they are the giant of massive merchant payment volume. Like they're unbelievably huge. Not in terms of TPV, like as a dollar amount, but as the speed at which they're growing and taking market share. They're the top rung. Okay, Dutch company doing very well. Yeah. Underneath that, the company growing much faster than them at nearly 60% or 53% on a neutral basis. Adyen, I think, is growing TPV something like 30%, 28%. It's been a while since I saw them, and they only report on a semi-annual basis because they don't have to deal with GAAP, and they don't even care to show you that. The market's already in love with them. DLocal is at a 4.7 times their revenue, and then PayPal nearly a 2x. Okay. However, whenever we start to look at PE, I'll just take a quick look at this. So Adyen 42 times, DLocal 28 times, PayPal 14. Okay. But then let's add on forward. So because Adyen's growing so quickly, you're not just paying 42 times this year, but you're only paying 35 times next year. Okay. Which means that they're going to speed up the amount that they are expected to earn and lower that cost. DLocal, you're paying essentially 28 times today, but only 19 times next year's. And by the way, Wall Street's been wrong on their expectations of this business. So that could, like, all of these could be much lower than what you're seeing. But essentially dropping by 9x, which is even faster than Adyen. And then PayPal is only going from 14 to 12 because it's not as fast of growth. So you're not going to see as fast of a drop off, but all of these companies are growing. So do you buy the company that's growing the slowest and you're getting the cheapest valuation? Do you buy the company that is the most mature, growing super fast with the biggest clients in every industry or in every market that is super expensive? Or do you buy the company in the middle that, by the way, if we were to look at this from a market cap perspective, there's PayPal at the top. Okay. So 63 billion, nearly $64 billion business. Adyen is 49.7 billion, $50 billion business. Or do you buy the company that landed in the center, $4 billion business? To some people, that's an opportunity. To some people, that's a worrisome thought. Okay. That you're buying a company that is so small that they're going to get stomped out if Adyen comes into their market. All right. So there's things to think about. To me, I do like LATAM exposure. I do like payments. But yeah, that is, that's very interesting. Can we talk about bear cases? I mean, there's two, right? Or at least two main ones. No, I mean, there's a ton, but one is they're dealing in all emerging markets and reporting in US dollars, and you guys obviously have US dollars purchasing this business. So how does this company fare versus your dollar? Okay. So essentially seeing, is there FX headwinds? Well, if the US dollar is strong, there could be massive headwinds. And that's sort of what has killed Nubank or even Mercado Libre recently, is just because the dollars that they're reporting cannot nearly be reported accurately versus US dollars. Well, I mean, they're reported accurately, but there's headwinds there. So that's an immediate one on the short term. On the sort of medium term is, where is the market going for stablecoins and how quickly are we changing due to blockchain and global payments, cross-border, all of these things? That market's changing very quickly. So we don't know. The long-term bear case is DLocal differentiated any differently from Adyen, and will Adyen come into their space and stomp them out like the bug they are at $4 billion because Adyen's got the tools and the resources to go after them, right? But the hope is that by the time that happens, DLocal will not be a $4 billion company. They'll be worth a heck of a lot more. Sounds like buying AMD over NVIDIA to me. Yeah, but AMD on a data center revenue. So let's imagine that the market is growing 50%, which it is. AI markets are growing at 50%. AMD grew data center at 15%, and even though they're much smaller, they grew at 15%. NVIDIA grew at like 58% or something like this, or 56% on data. So they grew faster than the market. They took more market share. AMD did not. Okay. So whenever you're talking about buying number one or number two, yes, AMD's much cheaper, but they're also not doing as well. Whenever you compare the performance of Adyen, they're growing closer to 25 to 28%. DLocal is growing at like 60%, 53% on a from a US dollar perspective. So that's not the same comparison because the smaller name is actually growing much faster, more than double. Um, how do you decide to buy another company and not just add more hoods, SoFi, etc.? I'm a freak. I should continuously be adding to those, but whenever I see an opportunity, I can't not buy it. You know, um, it's in my space. It's extremely cheap. I see an opportunity that the valuation turns around, and you know, forward earnings at this level of growth should not be 19 times, probably be closer to 40 or 50, and that's including the skepticism of LATAM markets. So I think that there's a lot of growth for them to see. And I think as the quarters go on and they can continue to hold up that 40, 50% growth rate, not the, 13% or even 9% of what they did recently, which put them in or put their stock down a little bit. I think that the market will, see them for a turnaround play that is actually growing. So who knows? Who knows? Like I said, this company has been much higher. There was a real belief back in the day that, DLocal was an insane growth opportunity. And then, there's been some misses and everything like this. So this has brought the company down a ton. But then you even see that in like Adyen as well, where they have always been the, high flying. Let's bring up, they not show me AY or ADYEY. So this is just their Dutch market one, but essentially it went super high and then sold off greatly because they missed one single quarter and then quickly recovered from there. So I don't think we're quite in this dip. It definitely didn't dip this far like what we saw in Adyen. But I think something akin to that is what we saw in DLocal. Bad headwinds put them in a bad place. The stock sold off, and but that doesn't actually change their market dynamic or how they actually face during other payment providers in LATAM, which are a lot of legacy players, slow banks. This is a cloud platform. It's taking many lessons from what we've seen in other industries for which we've won. PEG ratio of AMD is way better than NVIDIA. That's if you believe their PEG ratio. But yeah. Why you think Adyen isn't going to that market yet? I mean, I'm not 100% sure, but their ability to land and expand is not something that they've done, they've been a European payment processor for their entire existence and then just only recently broke into US markets. So they take things slow. And DLocal is essentially avoiding them is what it looks like. But yeah. Okay, let's see. AMD is making better chips to compete soon. Good luck. I mean, I'm not even anti AMD, but it's so funny that people write off Nvidia so quickly just because they're a $4 trillion business. Like, just look at the multiples that they're trading on, and then look at the products that they're actually talking about, coming out with. It's incredible. How's it compared to Stripe? Well, I don't know too many of the actual differences. Markets for sure is different. Stripe's definitely a US-based business for the most part. And then they were really for small SMBs, and they're working up to get into enterprise clientele. DLocal looks like it's taking more of the route of Adyen, and why I'm going to continue to base them off of Adyen is that they are, um, you know, trying to go after enterprise clients and then work their way down, both pay-ins and payouts. They're doing everything. Maybe do a deep dive with Neil. Of course I will. Of course I will. I'm going to learn, especially whenever I buy it, I'm going to learn so much on this business. These are just our weekly deep dives or like weekly first looks to see if these companies is something worth investing in. But as I was going through the numbers and listening to the CEO, I'm like, okay, I know this industry. I know the geographies. It's completely sold off. I love the multiple. I like, you got to love a cash light business. It's just fantastic, you know? So, pretty happy with buying a business with charts like this. Any other things that we should explore as well? I mean, I only really touched on a few things so far, but yeah. Look at Pfizer. No, I don't like like I just like the industries that I'm in. Any thoughts on Pagaya? I don't have any thoughts on Pagaya right now, other than the relationship with SoFi. But that will be one that we end up looking in at. I do think there could be some opportunity there. IonQ. Uh, Honestly, I think that there could be an opportunity for quantum. I'm not anti like do you, but I am willing to let, you could have bought DLocal earlier at $10, $9, whatever like this, and then have been wrong about their execution. What I think I've done, and for the long-term viewers of this channel, you will have noticed a trend of me trying to reduce my risk by seeing those, by allowing the market to find those breakout periods and then me buying them afterwards. So let me give you a quick example. Robinhood, I was pitched on that company at $7 to $8, and the statistics on the business looked like a falling chart. Okay, did not like it. Liked the product, liked what people had to say, understood that retail was liking the business, but monthly actives were going down, which they're an active trading business. So I was like, oh, monthly actives going down, like that's no good. Retirement accounts, who's going to bring the retirement accounts over to Robinhood, right? So I had all these concerns with Robinhood. And then in Q1 of 2024, they ended up showing off results that just blew everyone away. Robinhood Gold was a super success. Retirement was doing well. Monthly actives were skyrocketing. They proved that whenever the market starts to get bullish again, they are right back in the thick of it. Okay. And user engagement skyrocketed. I bought that. So it had climbed over the last 6 months before that from 7 to 8 up to sort of 16. I didn't like it. And then they showed off a quarter where it skyrocketed the stock to $20 and then came back from 20 or it was like $22 and then came back to about $17, $16. And that's when I made my first purchase. During that time, whenever I made my purchase, everyone was like, Tanner, you could have, like, we were telling you to buy this at $7, $8. Now you're buying it at 16. Fully aware. But the risks were much, much higher seeing it then than before the actual execution. So sometimes it's worth it to buy something after a little bit of a run up whenever it's guaranteed, because there's a lot of people that, I don't know why I have IonQ up here. This is not related. That will buy well, it is a little bit. That will buy something before people know if it's going to be a thing or not. Many businesses die. Many businesses do poorly. Okay. People can end up running their accounts into the ground because they want to buy something before that breakout period, because they want to get it at 8 or 10 before it goes to 18 and then enjoy the skyrocket. which if you can do that, good on you. But the days that you make a mistake and you buy the wrong one, it will hurt the total portfolio. So I always think like trying to rush into things before they're proven is hard. Okay. It's just a hard game. I'm perfectly fine having paid $16, $17 for Hood and watching it run up to 120 than I would have if I bought it at, 10 and watch it run to 120. Obviously, they did better than me, but I felt very comfortable at the time paying for something that I knew was going to work rather than something that I had hoped would work, if that makes sense. So the next thing that I'm looking at now is like DLocal. I would say whenever you're looking at this business and they're doing 13%, 8% growth, something along these lines. I mean, I'm hopeful. It's going to turn around. Management say it's going to turn around, but I've been in this game long enough where management will tell you they're going to do something and then they just fail. I mean, I don't want to find Skills again. Skills was a notoriously bad pick on my part because I had bought into this crazy CEO, which everyone goes, oh, you know what? Buy the crazy CEOs. Andrew Paradise was a crazy CEO. And then his crazy ass should be in jail, though. That's the type of crazy he is. This is like Trevor Milton, a fraudster. I know he's out now, but let him out, put Andrew Paradise in. So I'm fully aware that DLocal during this bottom part was saying that they were going to turn things around. But going from 6% to 8% to 17% growth to 49%, that is finding a breakout. You are strengthening relationships with large merchants. You're expanding worldwide. Your platform's getting bigger, and you're at a great precipice for blockchain, artificial intelligence, everything like this. So I prefer to look at, is that the same as Open Door? If you're suggesting that the breakout would happen for Open Door or something like this, I think sentiment has changed on Open Door. We haven't seen anything financially change. So I don't think that that's the same. But yeah. Okay, let's see. Nubank is super good, still under the radar. I think so. I'm very happy holding that company. I'll continue to hold it. What is the stock name of the new one? DLocal. I almost said Duolingo, but also Duolingo also fits under that same thing. If I'm not here to bring up Duolingo again, okay, but there was a real breakout period where they could show that they could expand growth. Once again, this isn't declining ever and ever. They saw a breakout level of growth. And then on top of that, the margins that they ended up seeing, let's go here. By the way, guys, the reason why I partnered with Fiscal AI, let's not forget the platform I'm using. It's unbelievably easy to use. Also ended up seeing improved gross profit, operating margin, EBITDA margin, net profit. Like they did expand during this period of increased growth. So they saw high levels of growth, while also seeing quarter over quarter improvements across, the enterprise. That's why I was interested in this business as it was dipping, because there was a sentiment change, like we saw with Robinhood, like we saw with DLocal, like we saw with frickin' Duolingo. Just because the market doesn't like something doesn't mean that I have to not like it. Okay. There's fundamentals and then there's sentiment. And fundamentals doesn't guarantee that a business is going to do well going forward, because Duolingo's business gets stripped out from under them if, live translation and all that comes out to be true, that people do not want to learn languages. But I'm not sure that's true. I'm not. Oh, sorry. Okay. Yeah, he was not. He was just saying, no, I was not talking about Open Door. Yeah, sorry, guys. The stock that I am purchasing on Monday is DLocal. This business, which is quite interesting. Quite interesting. Extremely cheap, cash heavy, meaning they have a lot of cash, but yet their actual capital intensiveness of the business is essentially zero. I mean, they run an extremely efficient product. They're doing very well, and they have an opportunity to, buy back stock whenever things are, not like if the market doesn't see that opportunity. There's opportunity for them to buy back stock. There's opportunity for them to expand into new markets, which they are. Yeah. But for me, if you're looking at a payments company, that's got to be one of the first places you take a look. Total payment volume, net dollar retention, and then take rate. They deal in payment processing for large merchants. So it's not consumer facing; it's almost business facing. But whenever someone goes to a checkout of a business and they put in their card details, or it says, "Hey, choose Apple Pay, choose Pix, choose Buy Now Pay Later, choose whatever," that there is something there for like there's someone handling the plumbing underneath that handles those payments. That's what DLocal does. Um, yes, I covered what they did, their financials. We went through their earnings slides and everything. So I'm telling you, the one place you need to be is Fiscal AI. You can just go to like their earnings thing here. This is like one of their latest calls, which let's see if we could find an interesting part in here. We're seeing significant pickup. Wait, there was actually one part, low share of wallet. Let me see if I can find this. There. Okay. So if we want to listen to this, for example, I can just hit this. Sorry, I'll turn this back to level 1. And then
tying that to share of wallet very quickly, we actually still have low share of wallet of our merchants. I think in LATAM, which is where we're strongest, we calculate that if you were to grab the entire business of our entire existing merchant base in Latin America, we only process about 20% of their payments. The rest is either done primarily by international acquiring or to a lesser degree by competitors or other payment service providers. If you move to Africa, that number is even smaller, and that's because international acquiring is still even more prevalent. And then Asia, that number is in the low single digits, and that's primarily because we were late to Asia. We've only really started focusing on Asia over the last year or so.
Essentially, what they're saying, which you could just listen to right here, and you can also listen to it like while you're going through the slides. Like we could just continue to sit here and listen to this guy while we're doing our research.
Early stages for DLocal.
So it's freaking awesome. Anyway, what was I going to say? So the part that I just highlighted to there is that they are dealing and still have merchant concentration as a risk, but those merchants are not like pouring their entire heart into DLocal. I mean, in Brazil, where they're strongest, still 20% of that merchant volume is going through DLocal. And then whenever you're looking at like Asia, it's low single digits. It's even smaller for that in Africa. So they are dealing with, extremely large merchants, but are barely dealing with them, only starting. They're gaining new merchants. They're growing super fast. I think it's an interesting name. Not only that, we can go in here and if you guys are interested in learning more, well, you can also search back, but we can just go through their entire earnings presentation here. See, like, total payment volume up 53% year over year, revenue growing 50% year over year. So a tightening in that take rate. But whenever you start to look at like their actual, what do you call it? Like flowing down to the bottom line, things are looking better and better. But you can also see like the problems that you're going to find with Duolingo have a lot to do with how much currency exchange. You're going to find a lot of headwinds because of strength against US dollars, problems with Argentina, stuff like this. So you have to monitor that. But there used to be a thing that I've always highlighted to you guys that I got from my old job, where sales solves all, right? If you continue to grow, those headwinds don't become as big, right? So move a little too fast. Did I say Duolingo again? But if they're moving really fast, it solves a lot of problems. And they are moving very, very fast. Which ticker you mentioned he's buying? DLO. Are you going to add a DLO stock zone on the Discord? I can, if you guys want to help me with some of the due diligence. I mean, we could definitely do that. I think that would be a lot of fun. I have checked SentinelOne. I just think if I'm going to buy SentinelOne, I'd rather buy CrowdStrike. That's the honest truth. I think there's a price to be paid for the number one player, and SentinelOne last quarter was a disappointment. Yeah. Do you guys come into me with the volume problem? I do not care. I don't care. This is not a concern of mine. I want to buy great businesses that grow. Eventually, institutional clientele will have to pick them up. And if they're so good, if they're making real profitability, then you might have a company that comes in and just literally acquires them, like PayPal or something like. I mean, Adyen does not acquire, but let's say if they are doing so freaking well, and PayPal is growing in different markets. They've been trying to go after LATAM, stuff like this. Let's say that they want more access to emerging markets. Well, okay, maybe we don't do buybacks this year, and instead we acquire DLocal for $8 billion. Well, okay, I just made 100%. Are you going to add it to the community portfolio? The community portfolio is not something that I don't adjust that. That's you guys handle that 100%. That's not my portfolio. The community portfolio is designed by donations from viewers. So, yeah. I don't own 104 stocks in my thing. I only hold it in that position, which confuses my brokerage sometimes because I'm buying all these freaking stocks, but whatever. I'm very, very fortunate to have a community that builds a community portfolio. Trust me, I'll handle the concerns. Have you looked into Interco? I have. I don't care about it versus Nubank. I'd rather buy number one than number two. Man, you should check out SentinelOne again. It was not what you said. I don't know what you mean. If you're saying that they ended up beating on their last quarter earnings, I would. I mean, yeah, we'd have to look back on that, but that's not my recollection. I'm pretty sure they had quite the miss, and they've been having misses, and that's why it's so cheap. Let's take a quick look. They missed on guidance. Annual revenue guide missed by 2%. Q1, a guide missed by 3%. They did beat on revenue by 1.4%, beat EPS by 1 cent. Net new ARR missed by 2%. It was a pretty underwhelming quarter. And then CrowdStrike just whoop. Like, it's not even close. But obviously the multiple is different. But beat and raised guidance. It literally didn't. I'm looking right at it. It did not. What's the thesis on DLO? I mean, that's why we've been here for an hour. I think payments is not going away. Yeah, I think they benefit from artificial intelligence and blockchain. I think that they're extremely cheap. They're growing. Google looks so good right now. Yep, I agree with you there. Shift 4 compared to Duolingo. Well, I think that there's not a super amount of overlap. Obviously, Shift 4 wants to become a Shift 4 wants to become a platform that Duolingo is for their industries, but right now they're mainly dealing in payment terminals. Oh, sorry, guys. I'm sorry. DLocal. Sorry. What is DLO's TAM? Well, it's payments. So multi-trillion-dollar. Like, that's one of the things. Payments might be literally one of the largest TAMs in the world. But yeah. Let's see here. Shift 4, though. Yeah, I think that they're honestly very similar. Where Shift 4 recently had quite the breakout because they went from just processing in the US to internationally due to their acquisition of Finaro. I think that DLocal is in a similar situation where obviously they have grown in Brazil and LATAM markets, but now, I mean, they're getting licenses in UAE, Turkey, many different places in Asia, Africa. They have like 40 different markets now. And yeah. Yeah, but does it have strong ass financials? I mean, I'm not saying that they're not cheap. Okay? But like what was their growth last year? I just didn't like their guidance. Their guidance didn't improve as fast as I'd want it to. I mean, the reason why I don't hold PayPal is because, like, you can call your company a growth company. Let's see some growth then. And I definitely don't think full port into DLO. This is another thing that I want you guys to remember is, like, if I'm starting a position, that means I'm starting it, and I'll get things wrong. I know someone said, like, oh, well, Tanner, if you're buying it, then I'm going to buy it. But, like, guys, you're giving me too much credit. We've been lucky. We've been in a bull market, but I'm no oracle. I'm just looking at the financials, hoping to find a good pick that outperforms the market. But we're going to get stuff wrong. So balance that risk and do your own research. Do your own research on Fiscal AI. Fiscal AI/future to get an exclusive discount. This is not just an affiliate. They fully partnered with me. I mean, like I've got a direct phone line to the engineers there. So if you guys are like, hey, this product is not working as good as it possibly could, or this could change or something like this, like, I mean, they're hungry for suggestions. So that's what I like about it. Like, there's a lot of YouTubers and stuff that try to build their own platforms. And those are not bad platforms, but you see them all over. Like, why would I want to build my own platform and everything like this whenever I could just partner and really closely partner with a company that just did like a $10 million raise and they've got, so many engineers and everything working for them. And I'm like, okay, well, I can just shape this product to be what I want it to be if they, do care about user feedback, which so far they have. I mean, I've made suggestions, even like the segments and KPIs. Guys, this is really, really cool. Send me in. If you are using Fiscal AI, okay, and you go to a company like SoFi, for example, and you go to their financials and segments and KPIs, and you're like, oh, well, I mean, it's got a lot, but there's this and this that it needs added, okay? Literally, like, send me that message. Be like, hey, because they obviously focus on the big names, the Googles, the Amazons, all those. But if there's smaller names like SoFi, and you're like, well, it would be great if they had these products, well, or these metrics, they could just add them. Okay, they're just using like Gemini to scan the things and like pull them out. It just makes the platform so much better. And then they also do have like custom segments, so it's easy to build. Like, okay, well, what's a good one? If we look at financial services revenue, and then financial services. Wait, is it under here? Why are you not working? Hello? Why are you breaking? There's a live demo and you're breaking. Financial services contribution profit and... Oh, did I just spell it wrong? Is that what it... Was that literally what it was? And then we'll just name it test. Oh, wait, whoops. I meant to do that as a percentage. So now we could just pull out and see what the contribution profit is. And then we could just like change this to like quarterly. So like you can just like build stuff on Fiscal AI, whatever you want. You can just tell it how to do things and it'll do it. It's pretty freaking sick. So as long as it can't just be done in a custom metric and you guys just need like the raw data pulled from the thing into segments and KPIs, like it's a non-GAAP metric, they can add that. But I mean, they do have a lot of stuff here. Like total members, total products. I mean, like it's all in here. You're not going to find many other platforms that do this where they pull out non-GAAP metrics. It's sick. Okay, back to DLocal. Thoughts on UNH? I don't deal in healthcare companies. I don't know. Nothing. Give Zeta a look. Yeah, I think there will be a time where we look into Zeta Global. Make a chart of this. Well, I actually think that is a thing as well. They do have this used to be called FinChat before because they've got a big like financial chat bot, but I don't really use it. I don't use that stuff as much as just like going in and grabbing the real data. But yeah. Thoughts on Domino's Pizza? Not the stock, just the pizza. Yeah, it's good pizza. It's good pizza. I don't eat pizza right now, though. Tanner never misses. Tanner misses. Tanner misses a lot. It's just, thank you. I don't know, man. It happens. Like no one is going to have a 100% success rate, and I wouldn't want you to think that I do. The hopeful thing is that whenever you do make mistakes, that you get out quick, right? That's the thing about stocks is like, I got SoFi right. You know, this will be a continuous grower, and that's amazing. You know, Hood, we got 100% right. This will continue to do very well. The great part about this is that you do not have to sell these companies. They can just continue to win. So whenever you get a company that works and is doing this well, don't sell it. Continue to hold and make more and more money. But on the ones that you get wrong, sell them quickly. Okay? Don't turn a trade into an investment. If you think something's a long-term investment, don't trade out of it. And if something is a trade, don't just continue to pour more money into it because it's not working. It's probably not working for a good reason. So, that's why I got out of Cash App or PayPal or some of these other names. Like I didn't want to hold something that was going in the wrong direction. But if something looks like this, like Hood, and it's not going in the wrong direction, then we just keep holding. All right. I am following IREN. Yeah, I mean, you would hope. Sorry, I was just covering the ones that were fitting in. Obviously, you try to find good names. You keep buying and holding them. NVIDIA here. And we're just looking at top line revenue, but it's just easy. But also, and I don't have the answer to this, but if we just go to, what is this? Let's just tear all this down, tear the stocks away. I have not done this in a while, so I don't know how this is going to change versus the pricing on the stocks, but we can just take a look. I don't know what we're going to see here. So AMD's PE right now is 95. NVIDIA's PE is 50. And they have identical forward PEs, meaning that AMD is expected to grow much faster than NVIDIA. So what we can do is I can see what AMD is going to expect in their growth here. And we can do that a couple different ways. One, let's turn this to quarterly, and then we'll close this gap. We can see growth and then growth rate. And then I also want, oh, well, that's not actually going to show. Yeah, it's not. But if you can see here, this range is not actually maxed. So Fiscal AI will look at forward growth based on earnings estimates and then allow you to chart those. So instead of just going to estimates, for example, and looking at what Wall Street is saying, when is this loading? Go. Okay. And looking at they're expecting 33 billion in December of 2025 and then 40 billion in 2026. Well, how can we visualize that in a really great way? So we can go ahead and take this bar if I am on a quarterly view and then pull that forward. So next quarter, they're expecting 28%. And if we just drag this all the way out, you can see that on a year-over-year basis, on a revenue perspective for AMD, they're expecting 19%, 18%, 24%, then 20%, all the way to September of 2026. It's just a great way of visualizing what Wall Street has. So you can see they have expectations for total revenue, operating profit, net income, basic EPS, EBITDA, and effective tax rate. And then they might even have free cash flow. No. Or wait, sorry, here. Yeah, they do. I was going to say, I would expect them to have free cash flow. So you can see, here's the last quarter, and then you can see with the E's for estimate how much they're expecting in pink. It's an unbelievable tool. Okay. I forget where I was going with that. DLO. We can also just see that for DLO as well. If we go here and then pull forward some of this growth. And this is the thing that I have a problem with for Wall Street sometimes. Sometimes they're just so conservative because they expect going forward for the next 2 quarters 41% and then 35%. Well, that's not what Duolingo's management doesn't even believe this is going to happen. They believe that it's going to be much, much higher. For a lot of you guys are SoFi investors. It's always a problem for me whenever I follow a company here. Oh, sorry, I need to standardize. And then we'll look at provisions. So you can see where actually they don't have it marked for them for estimates, but they do for net income. But you can see right here, June of 2025. No, actually, let's do EPS because that'll be one that we understand a little bit more. And then we can annualize that as well. For EPS, and then once we drag that out further, you can see 2026, they're expecting 55 cents, and then 2027, 75 cents. SoFi's internal estimates are saying 55 to 80 cents, so this would be at the very bottom. And then next year, they said a 25% increase of last year's. So Wall Street is much, much different than what you would expect, SoFi's actual performances, which has been closer to this. All right. Okay, let's go back to question and answer time. I'm late. I would go back and review everything that we talked about. Dividend Master says, someone posted about Enter. It seems super nice. You don't like buying expensive names, expensive first place names. CrowdStrike, Nubank, even Mercado Libre with Mercado Pago. I'm aware that Enter & Co. is more of a super app, but I think that that's easier for those fintechs to enter than what Enter & Co. can do to enter the underwriting and more the financial side of the Nubank and just the sheer size of 100+ million users. Tanner, do you feel yourself trending back to 30 holdings? Yeah, I think so. I feel that. But there's a couple names in my portfolio that I'm also looking at potentially trimming. So I want to keep it around 14, but I don't know. I have a hard time selling and I see opportunity. So I don't know. I don't have an end of year target for SoFi. I do have in 4 quarters, I think that we'll see over $40 a share. That's one of my current projections right now. Tanner, when do you think you'll sell your NVIDIA? I don't know. Not now. I think artificial intelligence is too early and NVIDIA is such an easy play for me. I do own BMNR, yeah. I don't have 14 positions right now. I think I'm closer to 18, and this would make it 19. That's not including crypto, which would throw me to 22. If SoFi still a buy? If I buy more, it'll mess up my cost average. It'll look less sexy. So I've talked about this a couple times, Crosby. I think it's sad whenever someone shows off a stock that's gone to like 3,000. They're like, look, my price average is $3. And it's like, okay, well, that's a great return. Like who doesn't like over 300x? But how did you not have conviction from $3 to $1,000 to buy more? How did you not buy at 6, at 9, at 15, at 25, at 45, at 100, at 200, at 300, at 400, all the way up to 1,000? I understand not buying at 700, 800, 900. Like the opportunity there might not be as good as purchasing something that has much more huge legs to going forward. But it's not all about. We're not optimizing for percent gains. We're optimizing for total dollar return. Okay, it's the dollars that are going to buy the Lambos. It's not the, hey, I got a 100x on what? 2 shares? Like, you got to actually put real money behind something to actually make it go up. So this is dollar cost averaging up is a lot harder than dollar cost averaging down. Very easy to dollar cost average down. I mean, maybe you have those early investor jitters where you question if you know what you're holding, but that goes away after a ton of research. Buying up is still hard. And that's where I think that the genius investors really come out. Do you own any Tesla? Do you believe sentiment on the stock has changed since Elon got his compensation pay package? I don't own any Tesla right now. I was a long-term Tesla shareholder. 2018 to 2025, I was a Tesla shareholder. And then is the politics that killed me. And then he goes, oh, you know what? Tesla's out of the politics. He's tweeting today about politics. So you can say whatever you want, but I like the product a lot more than the stock. And I've got zero problems with my beliefs in that Tesla will continue to put out some of the best cars and the best energy products, best artificial intelligence, physical AI. I think they're going to dominate. His ability to hire top content or top talent is insane. Like, I don't think there's another man on earth that can lead young, talented individuals into believing his mission. He's just replicated it over and over and over and over and over. I've got so much belief in him for that. But so does the rest of the world. And that leads the company to have quite a severe multiple. So I just don't currently have Tesla right now because the multiple is pricing in quite a perfect future. And if you've been following Tesla for any period of time, perfect in their future has been not the case. That things go wrong, right? And it looked to be that if the cyber van rumors are true and they put that in the background of their video on purpose, that I don't think that vehicle is going to do well. I think that they should drop the cyber look, because I think that is what is bringing on some of the political hate. For some reason, that design stands out so much that people associate that with his political views. I think all of his other vehicles will do fine. And I don't know, whenever the Model Y refresh comes to Canada, I'll probably end up buying that. I think my girlfriend and I are kind of sick of we both own sedans, and our life is just getting a little too big for that right now. I don't know. I think once you buy a house, you just buy more things to fill that house, and we just have things now. And an SUV sort of allows you to pack those things whenever you got to go somewhere. And we got a big dog and everything, so I don't know. I gotta get an SUV now. We're too small. Yeah, Shark Ninja things. We got too many Shark Ninja things. What are you implying, baby? No, nothing like that. I'm not anti, like, I want to be a family man one day. Um, get a little future investor. Get a Cybertruck Tanner. But you know what? If it wasn't for all the political stuff, I might have. Like, I've got no problems with the look. I'm one of the people that, like, I really look at cars and products as like utilities. Like, I don't care really about the look. I remember whenever I was picking out the PC, I was showing you guys, I was like, no, I don't want any LED. I'm not trying to make this thing look cool. I just want it to be like a beast. I want it to work well. I don't care how it looks. The Cybertruck for me really felt like that, where I'm like, okay, it's just this, you know, bulletproof vehicle that I could attach power tools to and carry around a ton of weight and tow more than any other vehicle. I'm like, I'm fine with that. Like, that sounds great. I don't care how it looks. It's bulletproof, whatever. But then I risk now people like walking up and scratching stuff into my car and affecting my insurance rates. Like, no, thank you. I'm okay. So I'll never buy it. Um, I'm not a car guy at all. I still drive my 2013 Hyundai and hope to drive it for the next 5 to 10 years. I'd rather have an expensive apartment than an expensive car. I think that's perfectly, that's an acceptable thing. Can your dog come on the show? She's been many times. I don't know where she is right now. My cat's sitting beside me. I can show you him. Time to wake up. He's so tired. I just woke him up. What's up, buddy? What's up, buddy? What's up? Yeah. So I got a lot of pets, but no kids just yet. That cat eats well. Yeah, he does. Spencer's never come into this chat said one thing that's nice to me. She's we love her, but like, come on. Do you think that you'll switch over to dividends when you get older? I assume so. I don't know. Because then I think about like the older venture capitalist guys, the Brad Gerstners and the Bill Gurley's of the world. Like, how old is Bill Gurley? I'm sorry if he's not old, but he looks it a little bit. He's 59. So as I get older, will I stop growth investing? I don't know. Do I need to? Or would I just stay investing in the stuff that I love today? Spencer's a chat bully. Depends on if they stop printing. Well, I'm not saying that I'm going to continue to hold on to the companies that I'm like all the way till I'm 59. I'm not going to marry a stock. But I would like to think that I'm going to stay invested in whatever form of, today it's semiconductors and artificial intelligence. Maybe in the future it's, you know, robotics, space exploration, or like space drilling. Like, I don't know what the future holds for 40 years down the line. But I'd like to think that I would stay forward looking. Maybe it's some human technology hybrid stuff. I'm all into it. Like, but that's what you have to be into if you're going to be a real growth investor. You got to be able to realize that the future is going to change. And it's not going to be like what it is today. And people want things more convenient, more cheaply, faster, more helpful, whatever. Like, That'll always happen. Spaces for communication, the other stuff is noise for now. Maybe it's for travel. Maybe it's for going and getting supplies. Maybe it's for sending people to Mars to go live in a new colony. I don't know. Like, those are so super futuristic things, but I'm not opposed to those. If someone pitches me on that idea, I'm not going to say like, oh, it's not going to happen because it hasn't happened. I think that that's a bad way of looking at it in anything. Yeah. I hope I stay invested in future disruptive technologies in general. Quoted B. Martin. Okay. Imagine SoFi grows at 20 to 30% per year until we are 59. Well, I don't know if that'll happen, but yeah. As long as they continue to go more asset light, I think that'll continue to improve a multiple. If they can bring in more money, growing faster by going more asset light, then they can do more much quicker, which would increase the growth rates. SoFi sponsor MVP quarterback is leading the Bills over Jets at halftime. Is the games going on right now? 20-3 by SoFi. I don't have a Shark Ninja outlook. I just think their products are great, and companies and CEOs that continue to outperform, I suggest that they are going to continue to outperform. Like, if they've done it for so long, they'll probably continue. And I have a bias because I use a lot of their products. And anytime that there is something that we're looking for a house appliance or tool or something like this, we make sure that Shark or Ninja does not make them already. Stop gambling and only DCA. I mean, that's your strategy. That's your strategy. It works for you. Oh, I think he's referring to the comment before. I lose money every time I buy calls on SoFi, so the ticker just pisses me off now. I always miss time. The run-ups. It's a stock that loves to stay flat for long periods of time. I think a lot of the companies that I buy are like that, to be honest. Yeah, I think you're going to see that from Nubank. You're going to see that from DLocal potentially. Yeah. Okay. Google or Amazon? I don't think you could get me to choose. Google? I don't know. I don't know. I think Amazon. I think it goes back to the chart that we showed at the beginning of the day, where it just highlights investing in companies that are capital light are better than investing in capital or companies that are capital intensive. Google is capital light, and Amazon is the most capital intensive business the world has ever seen. So, but they're also winning, so I don't know. I get to pick. I get to buy both. That's the great thing. Okay, ladies and gentlemen, I wanted this to be a 30 to 45 minute, video, but instead you guys have made this into something special where it's not just about pitching a stock on fiscal AI, but instead talking about a whole bunch of other things. So thank you for coming out and listening to this pitch. It's all brought to you by the great and powerful Fiscal AI. If you guys want to potentially gain access to this app, there is a 15% off thing for Fiscal AI in the description down below. Thank you all so much for watching. Really do appreciate your time, and bye for now.